Brilliant. Let me get started. Hello, everyone, and welcome to today's session as we kick off the South Asia Resilience Hub activities. Let me begin by introducing myself. I'm Akanksha. I'm the head of Climate Tech program at the GSMA. And I am kicking us off with the session today. I'll give you a bit of a background of the session, the plan, the agenda for today's session, and then hand over to our colleagues who will take it forward. When I was asked to kick the session off, I was thinking about, we keep talking about resilience. And if you just look at the word itself, it's important to understand that building resilience, it's not an easy feat. You could think of it in your own personal context almost, right? When we say we want to build personal resilience, we're thinking about ensuring that our basic needs are met with, that we are physically and mentally in good health, that we are secure financially, that we have support systems and such. And extrapolate that to the resilience in our communities. It comes down to ensuring that our societies are able to adapt, anticipate, and absorb shocks. And in this case, the biggest shock that is facing the humanity at the moment, climate change. And this shock, we can't prevent even in the best case scenarios now, right? So it's important to think about resilience from that aspect. And finance is at the heart of tackling this crisis. When we hear climate finance, it's mostly mentioned in the context of high-level commitments that you hear at COP, most recently at the Africa Climate Summit. And it gets hard to translate that into, how is it going to work in practice? It's important to remember that mobile and digital technologies can actually ensure that these vital funds reach the most vulnerable people and communities. The good news is that it's not a new thing that we are doing, right? We have tried and tested tools to enable this delivery. It's a matter of kind of stacking these technologies up, joining the dots. And that's precisely what I think at the GSMA we've been trying to do for a long time now, with support from the Foreign Commonwealth and Development Office of the UK and CEDA. We've been conducting research and funding like real-life examples of how climate finance could work in practice. This is what we are here to discuss today, together with Microsafe Consulting. We'll be discussing how we can build climate resilience through digitally inclusive finance, especially in the South Asian context. In terms of the agenda, we will start with presentations from our colleagues at Microsafe Consulting, who will talk about, sharing their insights from their work, specifically on the demand for financial services and the needs and challenges of vulnerable communities facing climate risks in the context of Bangladesh and India. Leila from the GSMA then will share insights from our recent research on the role of digital technology in the access and delivery of climate finance. We will then have a panel discussion focusing on increasing financing to the front line for those who are at the end of it and who are looking to build climate resilience through the use of digital tech. This will then be followed by Q&A. So please save your questions to the end, or maybe if you'll forget them, then just post them in the chat on the side. And we look forward to taking your questions. I'll now hand over to Arjun Dikshit from Microsafe Consulting to take this conversation forward. Arjun, over to you. And thanks, everyone.
Thanks so much, Akanksha. Hi, everyone. My name is Arjun Dikshit. I am a senior manager at Microsafe Consulting. And we're very excited to be able to host this specific session on looking at the role of FinTechs in advancing climate resilience. Microsafe Consulting is a boutique consulting company that is operational in over 8 sort of countries, and we have 250 staff working at the intersections of financial, economic, and social inclusion. And we're excited to be able to host this session and look forward to a very vibrant and fascinating discussion. As Akanksha was already alluding to earlier, there's a very strong need to ensure that work on financial inclusion supports the building of climate resilience. And digital solutions and technology can play a major role in ensuring that people at the front lines of the climate emergency have access to and are able to afford the range of financial tools and services that are required to build resilience. So what I'll do today is we will share with you some of our findings of some recent work that we've done in the state of Bihar in India and in southwest coastal Bangladesh. Let me just share my screen with you. Just a second. Okay. And today we thought that we'll start out by talking specifically about the impact of climate change on smallholder and small producer farming communities, because the impact on agriculture in particular across most of South Asia will be quite significant. And a large portion of our population continues to be engaged in agriculture. We already know, and many of you will already be familiar with that farmers that are on the front ends of the climate emergency already know that the climate is changing. There's greater variability, there's greater uncertainty, there's more intense extreme events. But the climate impacts are quite complex. It's not just enough to look at extreme events. It's not enough to look at the national level. There's a need to look at slower onset events, the small variability and changes that can lead to very compounded disasters. And there's a need to ensure that whatever solutions that we're coming up with are very, very localized, are informed by granular understanding of what's happening, because the impacts manifest quite differently in southwest Bangladesh versus northwest Bangladesh, for example. Right. So this particular slide provides you with a quick seasonal sort of calendar of what it's like to do Aman rice or Kharif rice cultivation in South Asia. Land preparation and planting normally starts in the months of June and July, and then harvesting tends to happen in November. And storage and processing sort of go on after November into the months of January and February. And that means that there are multiple times and multiple places where climate can make a significant impact on this type of agriculture. In June, when the rains haven't come, extreme heat and rising salinity can have quite sort of devastating impacts on saplings. If the rains don't come in time in July, your planting may be delayed. If the monsoon doesn't arrive in time, the seeds dry up. Over August, if the rains are erratic, if there's too much rain or if there's too little rain, then fields can become dry or they can be overflooded. Your saplings can be destroyed. Over September, as the monsoon starts to retreat, temperatures may continue to remain high, as we've seen in this particular month of September, for example. There might be greater incidence of pests and disease. Over November, which is cyclone season in Bangladesh, for example, your crops, your standing crops may get destroyed. There might be coastal flooding and intrusion of saline water. Your storage and drying of your crops may get destroyed over the month of January. So as you see, even across the entire sort of seasonal cycle for agriculture, there are many, many multiple times when climate can make a significant impact on agriculture. And as a result, the coping strategies that we see for people that are engaged in smallholder farming and small producers it's quite desperate. They have to borrow at regular intervals at high rates. They run through their cash and need to sell their livestock and assets in response to these changes. Often they have to borrow money to repay their existing debts. And even though there are microfinance institutions that engage in savings, those savings may not be available during emergencies. As a result of some of these changes, people have to move out of agriculture and start working as day laborers, or people look to really diversify their livelihoods, either through different types of crops, introduction of fishing, sort of looking at non-timber wood products from forests. And they can suffer physical and emotional issues, distress due to health problems of family members, that results in greater spend. Your accumulation of savings and wealth tends to decrease. So that means that people continue to remain vulnerable to the next extreme event, and the need for humanitarian assistance, government relief sort of tends to continue, and people sort of tend to rely on this. Having said that, in the last couple of years, there have been significant advances in ensuring that early warning systems for cyclones, for flooding, have improved, that there are evacuation shelters in place, and we are seeing instances of adaptation activities across the board where people are using improved seed varieties. People are planting vegetables and millets and other types of crops. They're changing their agricultural practices, trying to establish micro enterprises to diversify their income. And of course, migration, either temporary or permanent, continues to be a major diversification livelihood source for many people. And this is supported across South Asia by government programs and support, by the wide network of civil society NGOs that continue to provide support and services to people. But this is the same slide that you saw earlier that was looking at the impact of climate across the seasonal calendar for Aman or Kharif rice. The need for smallholder farmers for financial products and services at the bottom, it's quite intense across all the seasonal planting cycle. And often climate change makes this need quite significant and quite dire. They will need loans for buying agricultural inputs. They will need to borrow to get seeds. They often take loans from their relatives, friends, or moneylenders for replanting if their crops are lost to weather extremes. They often end up using all of their savings at homes for buying pesticides if and when pest attacks happen. They take loans from NGOs and from informal lenders and their friends to smooth consumption after a particular disaster. And they continue to utilize whatever savings that they may have for further processing or for making investments into the new cycle. So the need for financial services across the value chain for rice farming is significant. And the climate emergency and climate impacts make the case for financial services even worse. But if you actually look at the availability of financial services for smallholder producers and farmers, their role continues to be quite constrained. In our assessment, there's a positive role for microfinance in its ability to smooth consumption immediately after a disaster, or for informal credit, because people have an easier time getting access to informal credit to smooth sort of consumption after a disaster. But in all other areas, we saw that financial services do not yet play as big a role as they could. And sometimes, in fact, they can play a negative role, particularly in the case where savings that are often made with microfinance institutions are sometimes, for some MFIs, they don't allow their members to take their savings out in case of an emergency. So there are lots of issues, and remittance can continue to play a strong role, but in our particular research, we found very little evidence that people were getting remittances from abroad or from other parts of the country. So as you can see from this particular slide, the role for improving financial services to meet the needs of building climate resilience continues to be quite significant. And if you just look at sort of credit and insurance alone, if you look at credit, improved access to credit can really help in a place like coastal Bangladesh, can really help improve the adoption of salinity resilient rice, help farmers make investments in livestock, help them purchase goods and inputs. And to be able to do that, they would need lower interest rates. They would need installments that are adjusted to their cash flows. Ideally, they would need the credit product to be backed by insurance. But that we don't really see that happening. Interest rates continue to be quite high. And many of these products do not seem to be customized to meet very localized adaptation needs. In fact, in sort of our work so far, we haven't found any evidence of credit products across Bangladesh and India that can really help build climate resilience at the very local level. And even insurance, the insurance can play a very important role in transferring risk and help farmers smooth consumption. And often, for it to be successful, the premiums need to be affordable, and parametric index-based insurance products often are best suited. But often insurance is not available. The products don't exist. And if they exist, farmers have very limited knowledge of what insurance actually does. In India, there is the Pradhan Mantri Fasal Bima Yojana, which provides insurance to farmers across many different states in India. And we're seeing, and we'll have colleagues today speak about various sort of pilot programs on parametric crop insurance products that are slowly starting to get to scale. And then I'll end with talking about how the need for designing products and services, financial products and services that respond to the various needs for men and women is quite important. When we did our study, we found that the financial products that are currently available are not focused, for example, on women. They tend to be either gender neutral or they're focused primarily on men. And that the types of interventions that tend to be very focused on women is around sort of training and skill development, or around livestock or small livestock rearing, homestead gardening. So things that don't necessarily change the underlying gender relationships. So there's a really strong need to ensure that financial products and services address the differing needs for men and women when it comes to responding to climate change and building resilience to the extremes of climate change. Great. So with that, I think I'll end here. We'll have time for question and answers later, but I'll hand it over to my colleague Leila so that she can present to you some of her findings and her work from GSMA. Thank you.
Thank you very much, Arjan. That was very interesting, and it's super interesting to see the perspective of the needs in particularly certain contexts. And I think our work is quite complementary. So I will go through some of our findings from our work on digitally enabled climate finance. I'll also try to share my screen just now. Let's see if this works. Okay, also to introduce myself, my name is Leila Goisi. I'm Insights and Advocacy Manager for the GSMA Climate Tech Program. I work closely with Akaksha, who you heard talking at the very start. So I will talk a little bit about our research that we did and a report that we released earlier this year that talks about the role of digital technology in the access and delivery of climate finance, and particularly on how it can help vulnerable communities access climate finance. What's important to know is also that this is a global study, so it's looking at low and middle income countries and not specifically on South Asia, but it's still very relevant to this context. I can also manage to change the slides. There we go. So in low and middle income countries, we often struggle with issues like the lack of data and rigid and underdeveloped financial systems and the lack of climate information. And these issues have all made it more difficult to access climate finance. And our research show that digital technology can help us here by, for example, working in between financial sources and vulnerable communities and help them access, for example, loans and grants through mobile money. It can also help with establishing transparent and traceable systems. And it can also help with collecting data for climate finance decisions. And it can help with vulnerable communities accessing the carbon market. So now we'll go into a little bit about how this is done and what type of technologies are being used. So here I have 6 examples of digital technologies that can catalyze climate finance. First, I will not go over them all in detail because we don't really have time, and I want to save as much time as possible for the panel. So we'll just go quickly over a few of them. If we look at low-tech solutions, for example, like USSD or SMS, they still play a huge role in this context. Banks can, for example, offer financing through USSD. Mobile money, which is widely used in the African continent, can be used to access services like savings, credits, insurance, remittances, government transfers, and others. And this happens without needing to have a traditional bank account. And it can also be used for index insurances, which offers premiums and payments via mobile money for example, crop damage in the case of excess rainfall. We also have solutions like satellite imagery or remote sensing and GIS. And this technology gives us information about the Earth's surface, and this data can be used for monitoring crops for insurances. Let's see. Next up, we have in our research. Oh, sorry. My slides are not following me so much today. I hope you can see it now. In our research, we took a closer look at a few promising climate finance models. One of the interesting examples comes from the combination of Internet of Things and pay-as-you-go systems. So IoT devices are pieces of hardware, like sensors that can transmit data over networks, like the internet. And this can be used to collect data, which helps, or carbon data, for example, which helps with the participation in the carbon market. In the agri sector, the combination of IoT and pay-as-you-go can provide data that can inform decisions on access to loans and participation in the carbon market. An example of how this is being used is through the combination of IoT devices and pay-as-you-go for solar-based irrigation systems. The IoT system helps farmers manage their water usage, and then they're using solar power instead of diesel. But then irrigation systems are very costly, and by using the pay-as-you-go system, you can then bypass that by helping the farmers or giving the farmers the possibility to pay in installments, and then they will eventually own the equipment or return it at the end of the usage period. The data that's collected by the IoT device can then also be used for financial service providers to monitor the farmers' activities, which can be used for financial services like loans or insurances. And that leads us to the next example, which is FinTechs. And FinTechs are interesting in a climate resilience perspective because they can mobilize funds like loans and insurances. They can mobilize them quickly and to a wide range of clients. So that can include the vulnerable communities then. Digital technologies are obviously a key factor here. And for example, it's used in these three cases. So for data management and sharing, where digital technology can be used to enable personal advisory services to users like smallholder farmers on their particular finances. End-to-end digital payments through mobile wallets can make it easier to reach the most vulnerable by, for example, opening up the possibility to create a digital credit profile and identity through monitoring and tracking transactions. And this can be used, for example, through mobile money. And then we also have some governments in the low and middle income countries that have established public infrastructure to support private innovation in the fintech industry. And one example is the unified payment interface in India that makes it possible to transfer money directly from one account to another. And this is important in the climate finance context because it helps with the traceability of climate finance flows, which governments then can use for decision-making and planning when it comes to climate finance and investing. There are some things that can obviously complicate this because the fintech industry involves many key players like regulators, banks, financial service providers, and they all have to come together in order for this to work. And so there needs to be several enabling conditions that are met in order for fintechs to actually work and help vulnerable communities access finance. And so improved data sharing agreements and regulations will really help move this industry forward. And then I also want to look at the intersection between gender and climate finance that Arjan was also talking about earlier, because women are disproportionately impacted by the effects of climate change. And digital technologies can be used to collect gender disaggregated data, which is very important when you want to tailor women-specific climate finance products or services. And solutions like mobile money can then generate credit ratings or financial profiles to women who are traditionally kept outside of the traditional financial and banking system, and give them access to financial services like loans and insurances. And for this to work, we also need to look at issues that, for example, the gender gap in mobile phone ownerships for them to actually access these services, and the lack of gender responsive guidelines in climate finance. There is, for example, a need for gender responsive guidelines and allocation criteria in mechanisms like the Green Climate Fund. And I think I will stop there and just mention that we have this report that's out and you can download that through this QR code. Obviously, there's a lot more to say about this, but in the interest of time, I will wrap up here and just say thank you all for listening, and also thank you to FCDO for funding this piece of research. And now I will hand over to the next part of the session, which is the panel.
Thanks, Ella. Hi, everyone. Parth, I just want you to do a quick check. Am I on?
Your audio is good to go. Hi. Leila, can you stop the presentation? And Disha, can you pin yourself?
Yeah.
The screen? Yes, thank you.
Great. Thank you. Hi, everyone. I'm Disha Bhavnani, and I'm associated with the Digital Financial Services practice at Microsafe, largely focusing on payments and distribution of financial services to the last mile. Before we deep dive into our next item on the agenda, which is a interesting panel discussion, I would like to thank Leila and Arjun for putting across this dual perspective from the ecosystem's standpoint as well as a customer's point of view. As we all know and are aware that in the year 2019-20, the climate crisis became all too real. It impacts both individuals and enterprises equally. And both of these segments have an increasing need for financial resources, specifically in climate adverse situations. So staying true to today's topic, we believe that FinTechs could aid in the resilience of households, individuals, and enterprises in the case of sudden climate event. Financial instruments such as savings, insurance, credit, and payments, as well as new digital channels that support in mitigating the risks of climate change, can help it can help in mitigating the risks of climate change. The agility of fintechs focusing on climate finance can actually help in taking the edge off climate change risks for different customer segments. There are many multiple climate fintech business models that are emerging. In fact, at MSc, we ourselves are running a financial inclusion lab, one in India and one in Bangladesh, where we have provided technical support to multiple fintechs that aim to serve the low and moderate income segment across various thematic areas. Our extensive work in both of these labs, working with multiple fintechs across different cohorts over a period of last 2 to 3 years, has helped us believe that using digital technologies and financial product innovations can actually help overcome climate finance challenges by connecting different stakeholders, which can include banks, non-banks, startups, regulators, consumers, and some technology service providers, as well as big tech firms. Keeping that in mind, we've gathered a panel which brings in a diverse experience and perspective of working towards mitigating climate risks. So first of all, I would like to invite Vimal from AgriVijay to introduce himself and help us all understand what is AgriVijay's vision for energy sufficiency and financial stability of smallholder farmers. Vimal, over to you.
If Vimal takes time to come in, maybe we can, get to the second speaker, Munirul
Yeah.
or Sarthia.
Sure. Okay. I think maybe Monirul, we can start with you. So if you would like to first introduce yourself and tell us how BRAC actually works to improve the resilience of its customers from various climate-induced shocks and stresses, such as cyclones and floods, and also what is BRAC's overall vision concerning, climate resilience? Over to you.
Thank you, Disha. Hello, everyone. I'm Munirul Haq. I'm currently leading the insurance portfolio at BRAC Microfinance. So I'll talk about BRAC's vision first. So BRAC has a 5-decade-old organization. Now, the basic vision is to help people realizing their potential. That is the nutshell. So whatever we do, whatever we does, it's all about related to that. And we believe in impact, creating impact in the lives of the people. And these are the sort of the core of all our activities. Now, BRAC is a very large organization. It has microfinance, obviously, its largest portfolio or the program, but it encompasses from BRAC University to BRAC Bank, BRAC Securities, and a lot of things. But the core vision revolve based on the one particular factor. It's like the people, if there is a need, we will be there to help them out, to understand, so that they actually get themselves enabled with the particular tools, and we will be there until they are, self-sufficient. We had several, profitable venture that we had closed down because the market eventually developed for those particular segments or the sectors. So coming to microfinance, for particular related to the climate shock and the disaster, what we does, traditional factors of any microfinance or any bank does is a loan moratorium. That means the refinance or rescheduling of that loan. What we also saw, based on our experience, the savings really does work as a resilience tool in the case of, or in the time of any sort of shocks or disaster, for example, COVID or flood, to be specific. And beside that, I mean, these are the very traditional factors. And what additionally we did as a microfinance program, we offered a pre-approved loan, which is sort of an anticipatory based loan, or what traditionally we used to say is the forecast-based financing model. But the key factors of that was the credit score-based model that helped us to find the good behavior of the clients, and they got the opportunity to get a very quick loan, which we call a pre-approved. So there was no documentation further, there was no approval process. So they used to get that within 2 to 3 hours when they're, so it was related to the flood. So we did that in 3 years and eventually understood that that loan itself has the limitation, because you need to segregate people based on a scoring method. So we eventually shifted our focus to insurance, and currently what we are doing is the crop insurance that is linked to the weather-related shocks, and also the non-weather related, basically the natural related shocks like the pest attack and others. So talking about insurance to be specific, since I'm leading that portfolio, in 2021, with the support of Insure Resilience Solution Fund and SDC, we started a weather index insurance with 2 insurance companies, and also a partnership with Syngenta Foundation for Sustainable Agriculture. So we did that weather index insurance for around 2 years of now, and we work in around 220 unions or the locations. To be specific, those are the brands that we operated the weather index insurance. So it was covering heat waves, unseasonal rainfall, and other basic parametric that we can cover, and based on the data that is available. So eventually, after 1.5 years and having experience of 3 to 4 seasons, we eventually understood and received feedback from farmers that weather index is not covering the other factors that is hampering their yield, which is the pest, the flood, and others, the other diseases. So we actively looked for partnership, and then last year we started area yield index insurance, partnering with a new insurance company and with Pula. They are Kenyan-based insurtech, and we started area yield index insurance, and currently we are offering both of the product to allow farmer to decide which one they really want, which does make sense to them in a particular geography or demography. And currently we are operating in around 374 branches, and this is till the last almond season. That means last August, September, and we have planned to expand to 1,000 branches end of this year and covering more than 100,000 farmer this year. Yeah, Disha.
Thanks, Manuel. That was a very interesting perspective on how it's working out in Bangladesh. So I think while Vimal still joins us, I would like to invite Partha next, where he can talk about what AgriVijay is doing in terms of, supporting the smallholders to sustain a vision of energy sufficiency and financial sustainability. This is mostly based on the work that Microsafe Consulting has done with AgriVijay. Partha, over to you.
Right. Thank you, Disha. I apologize for for this because Vimal might not be available. He's got caught up into something. But we had a fairly long conversation in a run up to this webinar, and we also have worked on and off with Vimal's startup, which is called AgriVijay. Now, AgriVijay is probably the few organizations or startups in India that are solving for climate resilience or say financial resilience of smallholder farmers with a different approach. So while Monirul from BRAC talked about risk transfer mitigation as one of the approaches to address the resilience of smallholders or low income population, renewable energy is an interesting case because renewable energy creates resilience by ensuring that not only farmers are able to save on the cost of energy, but at the same time they are also able to continue the production in a sustainable manner even when grid connectivity is not available or power cuts are rampant in certain rural areas across India, right? So a continuous production system coupled with cost reduction in the overall agriculture production system enables farmers to realize a greater return on investments from these technologies. So some of these technologies like biodigesters also come with additional benefit of the slurry that is a byproduct of a biodigester energy generation system to be used as organic manure in the field. So it's a very interesting and a new approach of looking at resilience through climate change mitigation. But nevertheless, AgriVijay has embarked on this journey. And when they started, they were fixated on solving for two large set of issues. So first of all, since these are equipment, and unlike financial products, these are things, or these are tangible items that has to be delivered to the rural areas. So there is a logistics that is involved, or the storing, stocking of these equipment that is involved. The second thing is the after sales maintenance overall and maintenance of this equipment throughout the productive period. So AgriVijay partnered with rural population, with youth entrepreneurs. They use the village-led entrepreneurship model to ensure that the distribution system is localized and they are able to deliver the product in a sustainable manner. They are able to fulfill the orders that are generated in the rural market, and they are also able to create an information system which will allow AgriVijay and their service providers to timely service these equipment, so that the farmers or the users do not face issues, and the trust on the new technology that they are adopting doesn't get severed at the very inception. So that's point number one, or problem number one that they were solving for. The second problem that they were solving for is the upfront cost of this equipment. So for example, solar equipment or a solar pump doesn't cost less than 600 US dollars. So that is the starting price, and there are other technologies like a biodigester which can cost upwards of $1,000. So it is impossible for a smallholder farmer to come up with that kind of money upfront, although there are subsidy schemes that are available. So there is the Pradhan Mantri Kusum scheme that is available to smallholder farmers to procure solar pumps, but the modalities of accessing these subsidies in most developing countries and including India is not very easy, and farmers are not well informed of how to avail of these subsidies. So financing becomes an important problem, or rather a challenge that AgriVijay solved for. So they tried to partner with an NBFC in India, and based on the partnership they were able to offer some sort of financing which brought down the upfront cost of acquisition for the customers. So these are the couple of problems that they identified early on, and to date they have installed 10 of such equipment in their customer base through financing. And as per the latest information we have, 9 of those loans are still 9 of the loans are closed, just one is outstanding, and none of them have run into default. So the overall takeaway from this particular approach is that if timely logistics and a strong distribution and financing partner can be recognized by any service provider, any technical or technology enabled service provider in the market, then renewable energy can be used as an efficient tool and mechanism to drive resilience by enhancing customers' income. So that's all from our understanding of what AgriVijay does. Hope it has informed our audiences very well on the climate resilient aspect of apparently climate mitigation technology. So over to you, Disha. Thank you so much.
Thanks, Partha. Thanks for filling in. So we've heard two well-rounded and detailed customer side perspectives from both India and Bangladesh. Next up, I would like to welcome Mr. Srinivas. And I think we would request you to introduce yourself first and help us understand how WRMS informs climate risk management strategies of financial institutions.
Hey, thanks, Disha. Am I audible?
Yes, you are.
Brilliant. No, so that was lovely, and I think very good setting of the stage by Arjun, Akansha, by Monirul, by also a friend filling in for AgriVijay, Partha. He's been really good at setting the sort of stage, right? And I'll start off by introducing what we do and then maybe dive into the context for this session. So at WRMS, this is short for Weather Risk Management Services, we enable climate resilience for the underprotected, for the underserved communities. And to date, we have enabled over 10 million smallholder farmers and vulnerable communities to access affordable and relevant risk management solutions and to become more resilient against climate shocks. And when I talk about climate shocks, I'm not talking about just what we call as NatCat or loosely as NatCat, which is natural catastrophes. But as Arjun had so well elucidated, right? So even seemingly minor weather deviations, for example, the rainfall onset being delayed by a couple of weeks, or a marginal rise in temperature if you're in the dairy value chain, can have a calamitous impact on lives and livelihoods associated with agriculture and financial value chains. And that's the root of where we started. We started in 2004. Our focus was on reducing risk for smallholder farmers and to make farming more sustainable. This was at a time, if you recall, where farmer suicides in India and in South Asia were on the rise at an all-time high. And we felt we had to address this. The existing solutions weren't fit for purpose, and this was the frustration out of which we started our journey, right? The existing solutions, crop insurance solutions, were expensive, slow, and very subjective or random in terms of not just premium decisions, but also claims adjudication, right? Especially with crop cutting experiments, as some of us might have experienced. If you're not happy to chat about it. So since our journey in 2004, we have pioneered parametric insurance, not just in India, but in 4 other countries. And today, if we exclude our work in the India National Crop Insurance Scheme, aside from that, we've managed assets worth over $500 million. We've partnered with a range of financial services companies and insurers, and are present in more than 20 countries. And integral to this has been our technology and data stack, which has grown over the years. So we started off with the manual paper punching. We were reliant on the IMD weather data, and we had to actually physically punch this into our database. It's a world of difference today from where we were back then. So today it's evolved. We not only have our own proprietary data, but we aggregate from various national, private, and international data sources. So we have grid climate data from satellite data sources, remote sense data, yield data from various governments, and we partner with various Met agencies across the globe. We also have, out of need, have manufactured our own weather stations, but maybe more on that another day. Right now, we add over 1 million data points into our database each day. This is all structured, cleaned, and validated using our algorithms. And this is really key to the success of what we do. We're also involved with those of you who might be familiar with YesTech, which is the Indian government's yield estimation program using AI. We're also one of the pioneer technology companies in that, right? And risk management through parametric insurance is where we started. Through our conversations and engagement with farmers, we realized we had to really maximize the impact of the data we had access to, not just insurance and protection, but how can we enhance the lives and productivity of farmers. So farmers wanted access to this data to not just protect them, but to advise them. And we've developed weather models and forecasting and advisory tools using this farm level data. So we do geo level tagging, we provide cover and bespoke advisory at a farm level today. Now, in terms of financial services in particular, which is the subject or theme of this conversation, right? For the longest part, and I have been involved, as many of you on this call are, I have been involved in inclusive insurance for over 14, 15 years personally, and working with a range of financial institutions, commercial banks, and MFIs. And for the longest time, it's been credit life as the key and the only insurance or protection or resilience measure attached to the core loan offering. And weather has been not just a secondary sort of view, but something that's been ignored altogether, right? You have had personal accident, you have had health, which have been attached to credit life. But weather index insurance is something that is, though the onset and the impact and the risks have grown tenfold over the last 5 years, the products have not. It's only a very few players like BRAC who have taken the initiative and have been leading, pioneering, experimenting with parametric insurance. And most others have failed to sort of take the charge and see the real dominant risk in their portfolio today, which is not life, it's not health, it's not personal accident, it is climate change. And adoption has been low, not just because few have been ignorant. I think everyone's aware, but I think the issues with relevance, cost, and awareness of the products, which is what we have tried, sometimes failed, but sometimes succeeded as well in terms of addressing. So the high premium rates is a big issue. We've addressed this with a range of solutions, right? One is from ensuring it's very bespoke cover. It's not cover that is a one size fits all, but it's very bespoke and value for money. The farm level cover works really well in this regard. We have a program with MFin, and MFin network is the leading microfinance network in India. I think we have over 50 institutional members as part of MFin. And we were tasked with designing and implementing an insurance product, a weather insurance product for them. Now, the easiest solution would have been one size fits all. Even a state level solution would have been quite acceptable. But even within states, right? So Tamil Nadu, which is where I'm from, which is south of India, has a very diverse risk, as lots of other states and countries do, right? So the coastal region in Tamil Nadu is very different from something interior. And Monirul can attest to this, especially in Bangladesh, right? Where places like Chittagong have a completely different risk as compared to Dhaka, and even within Chittagong, there's varied risk depending on where you are. So that's the farm level or granular level design helps us address this pricing issue, where we don't add this buffer for volatility. We know exactly, precisely, based on our forecasting models, what the risk is for that particular area, and we're able to make the products more affordable, right? And that has been key, the product design and innovation. Second is distribution and awareness, but I don't want to necessarily jump into that. Maybe we can touch on that in the later segment of this, right? So our intervention with financial institutions has been important on two accounts. One is it helps obviously address their portfolio level risk. Second is these products with weather insurance, which is now super relevant and top of mind for the borrower base, is a great USP. It helps differentiate from others that are out there, especially with the pricing that we're able to design at, and therefore helps, you know, address churn, address market retention, address also attracting new customers at what is viable rate, because cost is top of mind both for the MFIs and for the borrowers, and the product design really comes into play here. So that's where our intervention, we think, has been successful with financial institutions. BRAC has obviously been pioneering the way from the client or distribution point of view. And I'd like to leave it with maybe one point that I think we're all cognizant of. Climate change is real. It's becoming more devastating, more pressing to address with each passing month, each passing week. And it's important to build strong ecosystems. No one player can do it alone. Financial services companies are key. Insurance and resilience is key. And I love that we have Agri Vijay also on the call, because it's important to build this renewable energy and sustainability into play as well. So my wish and hope is that we all come together to make our communities more climate resilient. And with that, I see Disha's back on, which is probably a cue for me to stop. So back to you, Disha.
Thanks. No, that's some great work that you've done. In fact, I think WRMS was also the one which designed the parametric insurance for in Fiji as well, right? South Pacific. So your work is not just great in India, but across 7 oceans as well. So thanks so much. On that note, I think we would want to go back to Monirul, and we would like to hear from him in terms of what role have BRAC's services and offerings played in helping build the resilience of its customers to climate change related impacts. If there are any case studies or examples that BRAC has identified on which, you know, you could throw some light upon.
Yeah, so thank you, Disha. So before going to that, I'd just like to give everyone, just for the context, for the sake of context. So as I said, like we tried something, a pre-approved loan model. We stopped that in 17 because it was not fitting, it was not scalable. So as Srinivas said, like, yeah, one size often doesn't fit, but yeah, often it comes with the limitation. So we were actively looking for partnership for, you know, immediately implement flood insurance or crop related insurance, which is related to the climate vulnerability. But unfortunately, we didn't get the partnership. So that is one of the challenge I believe this part of the world is continuously, you know, getting heated by, you know, getting long-term partnership. So why I'm saying this, because it is linked to the question you asked to me. So because we have 2 to 3 major lessons learned related to how whether it is working or not. But whatever is working for us, we hardly getting a partnership opportunity for the longer run. So I just want to say before going to the answer of the question that we are very open to collaborate. So if you have an idea, if you want to do something in Bangladesh, you are not currently operating, you are very welcome. If that is related to the climate vulnerability and it is related to the marginal farmers. Just to give you an example, Pula reached to us and we welcome that. And currently we are working we are going to start work in around 800 locations in Bangladesh. So the major thing that the major learning that I had as a practitioner and the full team and microfinance program had is the financial transaction related to the crop insurance or any insurance is absolutely important. So in our case, we do not embed this product with our credit, the product that we have, the loan product or savings product. We didn't subsidize the premium. So client has to pay us for the farmers, the marginal farmers cultivating, goro, almond, or vegetable in a bigha, that is the 33 decimal of land. He or she has to pay the premium. So why it is really working for us that since that person need to pay us premium, we need to ensure that that person to understand where for what he or she is paying for. And at the same time, this is facilitating the overall conversation and the education about insurance, especially the crop insurance. So often what we have seen in Bangladesh in the previous project that happened, this discussion often got stopped when there was a funding limitation was there. In our case, currently, without even funding, we are having this conversation and the level of conversation get decreased because we have been doing this for last 3 years. So the people who have taken it, they already understand what they are paying for and they have seen the value of it. Now I'll come to that particularly how we are ensuring the value. But these particular discussion and literacy helped us to retain around 57% of our clients who had taken insurance in crop insurance in 2021, or just like last season. So we had a borrow season in January and February. We sold this product, and around 68% of those taken insurance again. Now they didn't get any claim, by the way. So we disbursed some claim, but this education is absolutely important, and these also value them and value their decision-making process, which is absolutely important for us. Whether we are, valuing a marginal person, their ability and their decision-making, whether we are enhancing their decision-making capacity or not. So this is one part of the conversation and how these things working for us. Number two is the scaling up. So, and the value addition related to insurance. Now, we all understand, all the insurance people, we know that people do not think about insurance every day. We do not think about insurance in the morning. Even we are getting hit by any climate-related shocks or any other shocks, we do not think about insurance first. We may think of other solutions. This is the particular case of Bangladesh, for example. So we understood it at the very beginning that insurance standalone won't be a work for us. So we tried to bring the other value proposition, value factors that is linked to the farmers' lives and livelihood. So there was a discussion around solar irrigation. So we are also working on that with our partnering with our another partner, and we are open to partnership to ensure that solar irrigation is going to happen. We can give them that the insured farmer at a cheaper rate in the barring zone where the groundwater scarcity is there. We are providing weekly based weather forecast who have taken this policy, and we are also connecting them with the market, with their produce, and also trying to connect them in the sort of a backward and forward linkages through partnering with seed and fertilizer companies. So end of the day, what we are trying to say to our clients that if you take this policy, you will expose to all other opportunities that BRAC is going to work for you. So that will ensure a timely cultivation at your end, which is also linked to less risk. And eventually, this less risk will help us to decrease the premium rate. And obviously, scale up is another important factor. So we are trying to build up a holistic solution for our marginal farmers and trying to develop a business case. From the supply side, we understand the risk and we are trying to mitigate those not by just insurance, but also the other factors that is, that has a correlation, direct or indirect correlation with the risk. of the farmer's life and livelihood and the production at the micro or macro level, and eventually decrease the price so that we scale up gradually and sort of a quickly than the others. Yeah. So in a nutshell, just before going to you, Disha, so in a nutshell, we often undermine the capacity of marginal people, that they can't pay the premium. But what we have learned, if you ensure the value proposition of a product, willingness to or ability of payment will be directed by that. So marginal people can pay you, but you need to ensure that you are offering the right product for them. That's the bottom line from our experience. Over to you, Disha.
Thanks so much. So I think just basically picking up this pace, just quickly want to check, Vimal, are you around?
Yeah, hi, Disha.
Hi, welcome. So I think we'll quickly jump on to, the next question that we had for you. If you could help us understand, how does AgriVijay work with financial institutions to drive the adoption of renewable energy solutions to smallholders?
Correct. So first, I'll just explain a little bit about AgriVijay. So we are a marketplace of renewable and green energy products for farmers and rural households, where we understand their energy and agriculture needs, recommend, sell, finance, deliver, and install the solution on ground. So we are a last mile distribution deployment company helping farmers become energy independent with increased savings and income, along with fighting against the climate change. So we started our journey in COVID, June 2020, and since we are making these renewable and green energy products accessible, available through our renewable energy stores on ground, we thought financing will not, not only help us push and bring the scale which we want, but also the major challenge, which is actually for a small or a marginal holder farmer, is to acquire these products at a cost which is affordable for them, and also getting the financing facility, which is missing in the whole segment. So we were looking for a partner in the form of NBFC or banks who can help us finance these products, and eventually none of the banks is actually financing these renewable energy or green energy products, mainly solar, biogas. And we got tied up with an NBFC called Samunati, and we began our journey as a pilot where Samunati gave us a credit line to run the pilot while we evolve as a financial product. And slowly after, when we disbursed 10 loans to farmers on solar water pumps, solar inverters, biogas digesters, we realized that the intent to pay by the farmer is high on these products, because me having an experience in the KCC and agri term loan sector, I'm aware that there are lots of NPAs because farmers are not able to pay out, especially the poor, small and marginal farmers. But even a small and marginal farmer pays out, that the intent to pay is high if he's actually getting substantial savings from a particular product. So a renewable energy product like solar water pump, solar inverter, or biogas digester, which actually immediately brings lots of savings and income for a farmer, I think the intent to pay is very high. We have seen out of the 10 loans, 5 loans have been closed off, where the loans, and they are enjoying the warranty period. So we give warranty period of 5 years, which is compared to a typical dealer, distributor, or a manufacturer, which is 1 or 2 years, which gives a sense of assurance for the farmer, along with the free insurance against theft and natural damage, which also protect the interest of the farmer, along with the financing facility. And what we did was, we knew that interest rate, which is being charged by the NBFC or the banks, which is in the range of 18 to 24%, small and marginal farmer cannot pay out. So as an AgTech social enterprise, we absorbed that cost as a component, and we gave these financing facility or loans on 0% interest free EMI, or a subsidized interest free EMI, where zero processing fee was charged. And out of the 12 months which the farmer was paying, which was actual principal amount, the loan up to 1 lakh, which we gave on solar water pump, solar inverter, or a biogas digester. And it was very easy to repay him back the money to AgriVijay, and also enjoy the 4 years, 10 years warranty period, which is given on any product like biogas digester or a solar water pump. And if you talk about, there are a few cases where we have actually felt the farmer has got savings, and increased income. So there was a vegetable farmer, Shabuddin, which installed solar water pump. So before solar water pump, he was investing 15 to 20,000 to run his diesel gensets on diesel, also on electricity. So when you invest 15 to 20,000 a month along with your brother as a vegetable farmer, it's a huge expense for you as a small farmer, especially when you have less acreage of land and you're growing vegetables, fruits, and flowers. So when he made a choice of solar water pump, he was skeptical that will he be able to pay back the money, then will he be able to make savings. So he got 12 hours of uninterrupted supply of the for the irrigation in terms of electricity, as well as the hybrid controller which we give, which can run on electricity as well as on solar. So he made savings, which you can say he got an ROI within 1 year, and 4 years were his warranty period. And today, after 3 years with us, he still gives feedback to other farmers that you should go for the solar water pump instead of operating your electric water pumps on diesel gensets or electricity. So these kind of I think examples, they clearly say that these products should be made available. Then only farmers will be able to make choices, and we are clearly aware that if you really want to create a climate resilient agriculture environment, you need to bring financing element or financial resilience for these farmers in the form of savings or income, which will be the byproduct of the products they will be using for years, along with the abatement of GHG emission, which is majorly contributed by the agriculture. So I'll be happy to answer any other questions, Disha.
Thanks, Vimal. Yeah, so no, these were, I think, some really great set of examples for building the case that financial services aided by FinTechs can actually play a key role in building resilience. So I think to conclude this panel discussion, we will move on to our next question, and maybe we can talk more about AgriVijay during our Q&A session as well. So I think the next question is to Srinivas, basically. We would like to bring you back to tell us what financial institutions like banks, lending institutions, insurance companies can actually do to strengthen the resilience of their customers and minimize, their own liability or credit risk in the portfolios. So over to you.
Got it, Disha. Thanks for that. And maybe I gave a bit of a segue, and Monirul and Vimal did as well. We have touched a bit on relevance, but I think a point that's super important for all parties to talk about on day one, right? Relevance I'll come back to, because relevance and empathy are two important considerations. But before that, I'll start off with something that Monirul was touching on, right? Which is, in essence, no one wakes up wanting to buy insurance. It's not it's not top of mind either in the morning or at night, and therefore it becomes even more problematic when you're looking to price an insurance product and to make it affordable. If it's not affordable, there is no way the product will succeed. And at the same time, you have to bear into considerations of everyone involved in the ecosystem, and sometimes also make the hard decision of avoiding a fully subsidized program, which might seem like fantastic on day one, but which, as I'm sure many of us will have seen, severely affects the long-term viability and success of a product. So affordability is something that is always top of mind. It's always one of the first conversations we have with our financial institution partners. And to understand that, we look at what we call the premium budget, right? Where does this sit in, not only with the farmer or the individual being covered, but also with the financial institution? What's their sum insured? What's their monthly EMI? And where does this premium sit in within that price range? And try and arrive at what we think would be the most sustainable sort of pricing, and then try and reverse engineer. Now, just to give you a ballpark, right? We always try and start off from our side at what we call a 10% rate, which is 10% of sum insured. And this is something that we think, is a pretty good balance between what the customer is paying versus seeing some risk in the foreseeable future, which is a 5 to 10 year return period. And the balance here is tricky in terms of making it low enough to drive adoption, but also high enough to ensure, not just there's enough value for all the parties in the ecosystem, not just the financial services companies and the lenders, but also the insurers who are taking on the risk here. And we like to shortchange or be hard on negotiation with insurers, but we need to ensure that the products are sustainable for them as well. Otherwise, it's just a 1-year product and they'll walk out of the room. And importantly, it's ensured that it's also high enough to ensure there is value for the customer at the end of the day, or for the farmer. You don't want a product that is never going to pay out, and that defeats the purpose of the insurance cover in the first place, right? You need to try and build some engagement, some foreseeable return in the product, and that's the hard conversations that we have every day at the start of any engagement, is to try and arrive at what is the most ideal pricing. And there's no one size fits all. It varies depending on the partner, the location, and we need to get a sense of that to then reverse engineer the product. So affordability is key. As Monirul mentioned, subsidy is something that is something that we need to carefully manage. I've seen heavily subsidized programs that have fantastic uptake in the first year, but then no one joins up when the second year when the subsidy is lifted, and they feel the pinch of the product. So it needs to be very carefully managed. We like to ensure that if there is subsidy, there is a clear path as to how that subsidy is going to reduce, and the premium burden is going to be borne by whoever is bearing it. And we like to ensure that there is always some amount, X amount, that the farmer or the individual is paying out on year one, so that we ensure there's some buy-in and some attachment to the product. Otherwise, people are, not going to feel the pinch of the payment, but even worse, not going to be aware that they have this insurance cover, and that's one of the biggest risks that we have seen. So pricing and affordability is a key sort of challenge and consideration for us. We have our teams addressing this at the start of any engagement. And then second is relevance and sustainability, right? We talked about different locations. Now, even within a particular location, you can have, and I'll give an example of Advanta Seeds in India, where we partnered with them, right? So you had one village, but you had different crops being sown by different farmers in the village, and even for the same crop, you had different sowing start dates, and therefore different durations that you needed to cover. Even 2 weeks for a 3-month crop, is significant. So with Advanta, we sort of did a dynamic pricing product where the term sheets are dynamically created based on when the purchase is made, for which crop it is made for. And we ended up generating 3,000 term sheets over 3 seasons to account for these dynamic products. It was complicated on the tech side to manage it, but the upside was it ensured the products are relevant and affordable. And using QR codes and apps, we made sure that this messaging was done instantly. So there needs to be, a lot of flexibility and nimbleness in the technology, in terms of the design and in terms of operations, to really ensure you're giving affordable and value for money products. And the final point I'll make is, depending on how much time we have, the final or the last two, is timeliness. Now the beauty of parametric insurance is quick payments, and not only quick payments, but quick onboarding, right? You don't need a lot of information. You just need location and some insured and maybe a little bit more, but you don't need the level of details that you do in a traditional policy. But we still find parametric insurance products take too long in terms of getting the enrollment data, take super long in claims, right? Even more than traditional products, which is a crime in my view, at least. And we ensure that payouts are as instant as possible. And to do this, you need a fair bit of integration. You need the data sources, not just the data sources, but you also need integration with mobile wallets or whatever is most relevant for that particular customer. If not mobile wallets, at least paying to the MFI directly to offset that EMI or whatever the sum insured was. In Fiji, for example, we have the solution integrated with the leading mobile wallet carrier, so that there's an instant payment to the wallet whenever our platform detects the weather event has been triggered. In that case, it was excess rainfall that's been triggered. So that timeliness is super important, but we're now even talking about pre-event payouts, right? Which, when I first heard of it, sounded like something from Minority Report, which is pre-event payouts. But this is something that has gained a lot of traction in the last couple of years. It's also called as anticipatory action. And the reason is simple, right? A stitch in time saves 9. And whatever you can do in advance of the event in terms of a payout helps to a large extent mitigate that particular event. The FAO, which is part of the UN, even did a study, and I think they said for every dollar that is paid out in advance of an event, it sort of has a savings or an impact worth of $7 in terms of losses or post event payout. So that's the magnitude, and also the cost savings you can do through early action or anticipatory action or pre-event payouts. And using our forecast models, we are able to design, and we have designed products like this in Fiji, in Haiti, and we're looking at doing this in the Philippines as well. South Asia, closer to home, is something that we're already on top of with our weather stations. We already have such products in play. Now, yes, so forecasting advisory, anticipatory action, if you're not already engaged on it, I'm sure folks are, but if you're not, now is the time to engage on these, because this is really the need of the hour, right? And every dollar, every rupee is key to how we use it. I don't know how we are on time, but I'll leave it with awareness is super important for all that we do at the back end. We need to ensure that there is enough awareness. Moni Rules talked about this. That was my daughter. So Moni Rules talked about this, and we need to ensure that the population that we're targeting is aware. And in a few countries where we're doing programs, some of the farmers know more about the satellite data sources than I do, which is either a positive or a negative, depending on which side of the fence you're sitting on. But I'm definitely happy about it. We've even had requests to change the data source or to add in one location, for example, we had to add the local weather station data because people there were more accepting and believing and trusting of it. And the only reason we added it was because farmers were aware of where the data is coming from, right? And it's important to build that awareness and trust. Otherwise, again, the product is not going to sustain for a long time. So to sum it up, design is easy. It has a few factors that if you take into account, make it relevant, affordable, quick and seamless, and more importantly, make people aware of it. There is huge scope for making these solutions viable and self-sustaining. So I'll leave it at that. I look forward to hearing what your solutions have been as well on the other side. But thanks for your time.
Thanks,
to you,
thanks
Disha.
so much. Yeah, thank you. I think you've summarized it really well and picked up points from what all the other panelists sort of spoke about. And a lot of food for thought at the table for from most of the panelists. So I would just like to say a thank you for taking out time and joining this panel. And I'll hand it over to Partha now for the Q&A session.
Thank you, Disha. So we request audience to please pose your questions to any of our panelists or speakers. I think we have a question here. The question is, how can FinTechs collaborate with public and private sector banks to develop products that move beyond insurance and agriculture? Are such products already out there? Which leading banks are involved in, and what population? Just a moment. Yeah, and which leading banks are involved and what population segment do such product target? So yes, who would like to take this question? Anyone among the panelists or the
Yes.
speakers?
I can answer this because I have been experimenting and piloting with lots of banks and institutions. So recently we got tied up with Axis Bank. So lots of banks are looking to partner with organizations into KCC, Kisan Credit Card, or every term and daily, because it's very difficult, to get to the access of these farmers who are last mile, basically who are looking for these financing facility. And even if they want to, buy high capital products like mini tractors or renewable energy products, the agri term loan covers it all. Nowadays, lots of products are coming in where banks are ready to finance these projects where biogas digester is part of a dairy project also. So lots of new products are being enrolled by the even the public sector banks. So I would say KCC, Agri Term and Dairy Loan are one of the product which any private bank would be, looking to partner with you. And lots of financial products coming in. So we know that green energy space is very evolving now, like electric tractors, electric tillers are actually coming in. We also have electric tractors, tillers on the platform. So bank are yet to, come roll out the financial product on the electric mobility solutions, which are mainly for agriculture or electric equipments, I would say, similar to farming equipment, which they have done. So they are evolving, and they would be looking for pilots or pivots where they can tie up and work with companies to experiment, and alongside they want the organization to cover the risk on their behalf during those pilots. So at AgriVijay, we have done that in the initial phase, and later on when the product is evolved, matured, underwriting and every credit writing is done, I think then they can release the product fine for the other partners or ecosystem stakeholders as well. So I hope that answers.
Maybe Monirul can talk about some of Bragg Bank's initiative if he's aware of.
Okay. I would not go for Bragg Bank's initiative, but since we are microfinance, but we are not less than a bank in size of many things. So what I look for when I look at the partnership. So if as a fintech, and so because we have such partnership, so it is all about solving my existing problem. The problem can be related to the price, problem can be related to the communication. Particularly for insurance, those are the things that I need a solution. Now it can be done by me, my team and my program, or you can offer me such thing. Another major thing is related, as Srinivas was talking about, is the timely things need to be done. For example, for the claim. So let's say the current problem that I am facing for claim settlement through MFS, the wallet get changed very frequently in Bangladesh. And ownership of, I believe GSMA is there. So ownership of the mobile handset, it is still an issue. So if someone come today and give us a solution around that, so that something that will pay them very quickly after getting the necessary, analysis from the partner. So once I decide a claim, a trigger reached today, I need to disburse the money tomorrow. So if you give me such solution, I'm happy to collaborate. So these are the things. It's all about whether you are making my life easier or not. So that as a financial organization, that is what we look for, particularly. Hope that answer to that question to some extent. Yeah.
Right. So thank you, Vimal and Manirul. And there is, it's not a question, it's a request. Someone is saying that, we should focus on mitigation as well. So I think, when we look at climate change, from a very macro and a scientific perspective, we talk about mitigation and adaptation as two different threads. But when it links to the lives of individuals at the low income segment, especially poor and vulnerable people, these go hand in hand. I mean, you cannot have climate adaptation without these new age technologies that also in a way addresses the issues of circularity, sustainability, and mitigation or sort of reduction in carbon emission. So while the focus for the developed world, who are the largest emitters of greenhouse gases, would continue to deliver large scale solutions for reducing carbon dioxide through advanced technologies. For us in the global south, we have a dual challenge to not only ensure that our populations remain resilient because we are at the front line, but at the same time we also need to transition to more sustainable energy sources, and as exemplified by the works of Vimal, the work that our WRMS and BRAC is doing to sort of integrate the two approaches and create solutions that addresses both the needs. So yes, I mean, practitioners are at it. I think practitioners like Monirul, Sarthi, and Vijay, they understand this implication, and they don't see adaptation and mitigation as two separate, but I think joint initiative. So in the interest of time, we will close this Q&A session, and we like to really thank our panelists for taking time to come and talk about their solutions, and from a practitioner's point of view, really helping us understand the challenges, the market level challenges which we often ignore at the development world or development sector. We think that designing a program and implementing is all about providing grants and subsidies. But once the program move beyond subsidies, when the market forces come to play, the market forces of supply and demand comes to play, these are the practitioners who are at the front line, who make sure that the programs continue to scale up, and their brilliance in terms of designing the product, being empathetic towards both the client, the end users, and also the financial institutions who have really the money to drive these initiatives at scale, is what is noteworthy. So we, as GSMA and Microsafe Consulting, as technical advisors and champions in this climate resilient agriculture field, we would like to continue engaging practitioners and technology experts like our panelists, and we hope to continue this discussion forward on and offline sometime later, and look for further engagement. But now I request GSMA, our co-sponsor of this webinar, to please take the seat and provide the valedictory speech. Over to you, GSMA colleagues. Thank you.
I think actually Akanksha had a sharp out at 12:30. So unfortunately we've missed her. So I would like to just take this opportunity to thank everybody for attending this session, and also to Microsafe Consulting. I think that Partha, you summarized this very well, so I don't really need to add much to that. But this was a great session, and like one of our panel members said, the climate change is real, and so we do need to continue working with this, and we all need to continue collaborating and keep the conversation going. So yeah, with all of that in mind, thank you so much for this session. And if anyone else wants to jump in, please do. But otherwise, I think we're finished now. Thank you very much.
Yes, thank you all. Thank you all for your time and attending this webinar.